Hello traders and welcome to another video review. Today is Tuesday, February 14th, 2023. Let's find out what is going on the Forex calendar. What do we have here? Very important event had happened in Japan. GDP of Japan for the fourth quarter had been published already. The previous reading was minus 0.2%, forecast was 0.5%. We are waiting for the update here. What was the actual reading? Nevertheless, we still have some data scheduled for release from Great Britain, average earnings index and bonuses, and Claimant Count Change. As you can see, the average earnings index is supposed to drop from 6.4% to 6.2%, and the Claimant Count Change supposed to drop accordingly as well. During the New York session, we have a very important data in form of the core CPI scheduled for release at 2:30. The core CPI should stay at the same level of 0.4%. And this is a very important measure of the inflation and inflationary pressure on the economy. As we know, if there is a greater inflation prospective, there's a greater inflationary pressure, the central bank of the USA, which is of course the Federal Reserve, might change the monetary policy, and we should expect some changes in the interest rate. So please be very careful, be very focused when this data will be published today at 2:30. The market might start to discount some kind of events, future events, after the core CPI from the US is published. And of course, the bigger the difference between the forecast and the previous reading and the actual reading, the market might surprise the market, the participants, the investors, the traders, by moving in some kind of a direction very aggressively and dynamically. So what do we have here? Is a Forex calendar. Now let's take a look at the US dollar to the Japanese yen to see how the GDP from Japan affected the market rates. So let's go to the US dollar to the Japanese yen and see what is going on here. This is a 4-hour chart. As you can see, plenty of the candlestick patterns were adjusted here. And what do we have here? What's happened during the last 4 hours? As you can see, we are continuing to move lower. We are continuing to move lower because bulls are unable to move above 132.90. This is the technical resistance here. This is the level that looks like a double top right now. The market moved lower towards the intraday technical support, are roughly around the level of 131.83, just above the 50 periods moving average and just above the 100 periods moving average. We have one more technical support. This technical support is medium strong, located at the low from the 10th of the February at 129.81. Of course, the key technical support is located at the level of 128.08, and this is the green line here. Okay, so that's the level that holds the bearish pressure. If it's broken, then of course we should expect lower prices to come very soon. So for now, the outlook on the US dollar to Japanese yen remains sideways. It looks like this market wants to move from top to bottom in a kind of an orderly manner. The momentum is roughly 55 points. It's just bouncing up and down from the level of 50, which is the neutral level, of course. So as you can see, there is almost no reaction on the GDP data from Japan, and no more candlestick patterns have been discovered on this chart. So that's the US dollar to the Japanese yen. We got some data from the Great Britain, United Kingdom. So let's take a look at the British pound to Japanese yen this time. What do we have here? 4-hour chart, of course, and we got the major technical resistance straight on. We can place it on the chart. This is 161.82. That's the big red line here. The other technical resistance for now, is the high of this candle, 161.71, and we can see the technical support located at 159.92. This is the technical support, intraday technical support. The market is moving up and down in a very orderly manner. It's a kind of a horizontal trend. As you can see, we are coming off the extremely overbought market condition on the 4-hour chart. So that is this this last push to the upside towards the 161.70. Now we are pulling back lower. Let's find out how big were basically the last two corrections or pullbacks. This one was minus 1.57%. The other one was 1 point, I guess it will be 1 point. Where is my measure? There you go. 1 point. Let's just move this one here, and we have 1.32. Well, pretty the same. So this one should be very similar to the previous one. Let me just find out the price range. There you go. From this high, 1% is around the technical support, the dynamic support at the 50 periods moving average, 1.30. Right now the 100 periods moving average is providing some kind of a dynamic support. Nevertheless, it looks like we are going to test lower price levels around the 15 periods moving average. So that's the British pound to Japanese yen. Let's find out what is going on the British pound to American dollar. The situation here is a little bit different because this market is trying to bounce. After this bullish engulfing pattern had been made. The low of 1.1960 is very important in that situation. We make it thick, big thick horizontal green line. We got this bearish reversal here, which is important as well. So let's just mark it. 1.2193, and as you can see, the market is now testing the 50 periods moving average, and it looks like it's been already 4, 8, 12 hours of testing, and now it's another 4-hour candle. But it looks like this is some sort of the bearish candle. It looks like a shooting star right now, which is very unsettling for the bulls, because if that candle will close below the level of 1.2136. This will be very clear indication of the bearish pressure on the British pound to American dollar, and we might revisit the level of 1.2031, which is the low of the yesterday. So please keep an eye on this kind of a movement on the British pound. We can do some sort of the parallel channel here. Let's see if that will work, because that would be our lower line of the channel, and that might be our upper line of the channel. Yes, let me just find out. Okay, I got my magnet, so magnet is off, and the upper line of the channel would be a little bit higher, maybe here. There you go. And now if we do it like this, you can see that the market might be moving inside of this channel, so something like this. So we are in the middle of the channel. So that's another technical clue that the market is having problems to move directly above the middle of the channel as well. So this is the corrective channel, because the main movement is to the downside. This is the corrective channel, and soon we should see some kind of market reaction on this 50 periods moving average. It looks like the market, despite the positive momentum, looks like the market is trying to move a little bit lower from this levels. And last but not least, let's take a look at the crude oil, because we got very interesting candlestick patterns here. So what do we have here on a 4-hour chart? Please take a look. That we got Marubozu candle and tweezer tops, and if I should suggest that this is a bearish engulfing as well, around the level of 80.61. This is the level that The reversal pattern has happened. So let's just place our horizontal ray to see where is the resistance. There you go, 80.60, and the lower level, which is important because it's a technical support, is around this low from the yesterday, 78.45. So the market is moving up. Nevertheless, the momentum is still positive. It's still quite strong, 56 points. But the tweezer top and the Marubozu candle and bearish engulfing is telling us straight on that the bearish pressure is very strong on that levels. Despite the fact that we are trying to test 100 periods moving average, we are still bouncing from it. So if we break below that level, then we test 78.56. And then of course 50 periods moving average right now at 77.56. So please be very, very careful when you are trading the crude oil. Right now, let me just see what is the price range of this recent movement to the upside. The recent price range is 11%. So 11% rise in the price of the crude oil might be asking for a correction. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.